All right, all right, all right. Here we are again. Who's ready for a bounce? Hit the subscribe, hit the bell, hit the like. Join me today on Twitter at off_trading. Catch some trades. Man, we've been making money hand over fist with these momentum. Oh my goodness. And at least you benefit there. I know people are probably getting hurt on some long positions, but take advantage of the momentum, do a little bit of day trading, and you might make up for that loss. Might net out a loss for the month, but at least you'll offset it. I really can't complain. So far, I'm not doing too badly. Had to give back a lot of profit on some income trades, but that beats a poke in the eye. Much rather give back the profit than eat up the capital. And it's a hard thing to do, but it's what has to be done. And some of you guys who follow me for a while are familiar with Psycho Broker. And I'm starting to get his calls again. And we were in a position yesterday where I told him, listen, just, peel off some of these at-risk positions, eat into that profit, and protect your downside. And he didn't do that. He didn't want to give back the profit. He had to make his number for the month. You cannot trade your profit and loss. You take a good trade, you take a bad trade, you close out bad trades, you profit on good trades. You can't trade your profit and loss. You can't look at that. That's what he did. Stayed in it, and I was getting calls all night last night. What am I going to do? What am I going to do? What am I going to do? What are you going to do? It's 8:30 at night. There's nothing you're going to do. So, enjoy your family and chill out. We can't make decisions until the market opens tomorrow. And then, every time the market went down, I got another text. He was watching the future. So I was like, dude, can't trade on this. Just chill. So here we are this morning, and the futures are we're only down $1 on the S&P. And I don't know, it's not all that encouraging for me. It's not telling us much, but let's just take a look. We got Pentaton, and this news has been up there, so there's really nothing to talk about. Look, stock market's getting close to forming a bottom. You ever notice every time they go down? I mean, I like Kramer, but everybody says the same thing. Well, you can start buying here, but don't buy too much. And then when the market's ripping up, now's the time to buy. So anyway, depending on where the market is, if you watch CNBC, all you hear is, I'm a bear, I'm a bull, I'm a bear, I'm a bull, all day. So they just find guys who will get you on the position of the market or the quote. Oh, look at that, she went green. And that's what they throw out there on the article, in the articles. So, and then you have these public analysts, and nobody wants to make a prediction. I mean, I tell you what I like, what I expect, but you can't make a prediction because nobody knows. Nobody knows. When we're trading, we have a bias, and we look at price action, and we figure the bias. But we're trading what the market is doing, and that's what's important. You gotta trade what the market is doing. And right now, the market's going down. If you have a long-term expectation on something, then you don't mind that it's going down. It's an opportunity to chip away at stuff, and that's how you make money. And that's how these people make money. They have tons of money they're representing, and they buy what they like, which is good companies. You buy good companies, and you wait. And you're wrong today, but you're right tomorrow, and it's that simple. That's what it's about. So the whole game is risk management, and if you buy good companies and you're not worried about shit going to zero and disappearing, then that's a risk management program. Look, you buy Tesla and you put $10,000 in Tesla, your $10,000 isn't going to disappear. And that's what you have to look at. It may go down, it may go up, but you know what? There's a product there. There's something going on. And eventually, even if the company starts sucking, somebody's going to buy them out. They have market share. They have a name. That something's going to happen. Maybe it's a losing position, but it'll roll into something else. You get your money back. If you lose patience, then you're only as good as where you get off. So that's the short of the long as far as investing. As far as trading, again, you don't predict where it's going to go. You don't hope. You do what it's doing. And if it's not working out, take that loss. We're putting cash to work by buying more shares of this drug maker. Yeah, everybody's going to say that. They're putting cash to work. As shit goes down, they're putting cash to work. When the market returns, yeah, we've made a good buy. Yeah, you know, I mean, I'm doing it with ARK. I feel that this whole inflation story is overblown. I mean, obviously there's inflation out there, and we're getting our ass handed to us and everything. But it's a supply chain issue. It's not an economic issue. Until I start seeing the country deteriorate, I'm not terribly worried. So I'm saying buy an opportunity. So like I said, started buying ARK at 84, and I'm buying it every time it hits little target prices here and there, and I'm chipping away at it. And I'm confident that it's going to roll around. I mean, I could be wrong. I may take a poke in the eye, but I'm pretty sure that things are going to roll around. I mean, you know, China had to cut their interest rates, you know, the short-term rates that affect mortgages and stuff like that. But, you know, China's locked down. But the other end is China's locked down. They're not consuming goods. And we talk about China not shipping shit that we need, which is good because it'll make everybody adjust and say, okay, we need to diversify. We can't get all our shit from China. But we have shit all over the docks. And when there's inflation, there's nothing on the shelves and the docks are empty, then we got a problem. So I think the docks are going to start flowing, and we're going to be on the other side of the coin. The feds are, which I think the feds are aware of this, but the feds are going to take a look and be like, oh, all right, we don't have to raise so aggressively. And a lot of shit's going to come back hard. I mean, a lot of shit is not going to come back. This is the point where Buffett had said, when the tide goes out, you get to see who's swimming with no trunks on. And this is what's happening. Yeah, you know, the tide's going out. People are backing away from techs that don't make money, and the techs that do make money survive. And I saw this during the dot-com era. So anyway, anywho, that's it. And I know I didn't get to any stocks yet, but hey, it's my nickel. So we have no news today, which is cool. We get rig counts, no big deal, which I guess people are watching rig counts because oil's an issue, but there's plenty of oil in reserve. They just have to release it. Next Monday, we get the composite PMI, and Tuesday, relatively quiet. Yeah, you know, people are looking at housing prices and stuff like that. But that's a big inflation indicator also. So that baby starts coming down. We start seeing some bad news. Bad news is good news right now. That's what's in fashion. Okay, here's the big day, baby. Fed interest rate decision. So on Tuesday, they start meeting. Wednesday, they make their announcement. So this is when the party starts. This is what everybody's looking for. I'd like to say that it's going to be a quiet week going into that, but I thought this week would be quiet because we're ahead of the interest rates. And not the case. People are slamming. And I think that's what it is. They're rolling out of the shit. They're changing the investment philosophy. And they're changing that philosophy while they get beat up with the interest rates because they don't know. They don't know. And once the buyer comes back in on its more aggressive growth stuff, they're going to change all over again. So here it is. Here it is. All right. So here we are. Look at this. Crazy. Down, 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 down. Now, these retraces are retraces. So it's getting hard to kind of figure. We're going to open up flat. Might be the hammer day. I mean, the momentum is not turning that. You know, it's just, you know, down, 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 down every day. And we're not going to make a V bottom, that's for certain. But we haven't even made a retrace from the last high. And I mean, I'm thinking 43.63 is like our number. The 200-day is at 4,400. 43.63, that's going to give us like a 10% correction from the 48.18. So I mean, we have the momentum, we have the energy. That could be a tag number. Today's Friday. We might get that bounce. I mean, really, over the next few days, what I would like to see is a retrace up to the 50%, then a turnaround and a tag down, all the while turning this momentum. That's what I'm looking for. This is on the long term, all the while turning this momentum. And if I and then take out that 43.63. If we could get that, that's a nice pattern. That'll tell me about a bottom, you know. But right now, I mean, they may put it in the news that we may be creating a bottom. I don't see any bottom. The only bottom I see is Psycho Broker's bank account. So anyway, that's what I'm looking for, man. That's what I'm looking for. So watch the interest rates because we trade on the interest rates. Once they close the interest rates, I think they close it at 2:30, 3 o'clock. I forget. But once they close the interest rates, then boom, forget about it. The market just falls apart. And looky. We have this big old gap. We're right at the bottom. It looks like it wants to break this. If it breaks the low, if this is the 10-year. If the 10-year breaks that 1.813, it's going to it should come down aggressively. And this is around the time that bonds trade aggressively. It just shot up too much, and it should come down before going back up. The interest rate is going to trade just like a security because it's based on the 10-year bonds or the 30-year bonds, depending on which interest rate you're tracking. And bonds are an equity, and they trade up and down. You have supply and demand issues, just like any other asset class. So that's what I'm saying. Yeah, that's pretty much all I'm looking at. As far as the stuff you like, just keep chipping away. Even Viacom got slammed. And they're starting to get attention. I think Viacom's a good buy. And then I think you get like a 2% dividend. I'm always chipping away at Verizon. I've been chipping away at XOM 60 and did very well in a very short period of time. I didn't really expect that. It's just I usually buy it between 55 and 70. It was down at 60. I started buying again, and then it took off. So, yeah, and that's how it is. I mean, once in a while you get lucky. I like AT&T, man. They're getting active. They're getting that 5G out. They're taking a beating right here. The dividend is like 7% on this thing. So, why not, right? I mean, they're paying you 7% to hold their company. They make money. They're getting aggressive with the 5G. You'll do all right. I mean, if the stock closes here next January, you made 7% on your money. Can't argue with that. And you know the other companies that. So I'm not going to go through it and bore you. Anyway, hit the subscribe, hit the bell, hit the like. Check me out on Twitter at trading_off. You like what I'm doing? Tip your host. So everybody, good luck today. Calm, cool. Be at peace when you trade, and I'll catch you later.